Imagine it's February 2020 and Wall Street is buzzing about an invisible threat, COVID-19. Traders aren't just guessing, they're staring at charts, reading candlesticks, trying to decode the market's pulse. That moment is a perfect example of technical analysis in action, spotting patterns, mood swings, and price moves that raw numbers or news alone can't reveal. But how exactly do you read that chatter beneath the chaos? Let's unlock those trading secrets. Candlestick charts aren't just pretty graphs, they're shorthand for fear, greed, and power plays. Unlocking their secret language is your first step to outsmarting the market. Barbara Rockefeller traces candlestick charts back to the 18th century, when a Japanese rice trader named Munehisa Hama blended price and volume data into colorful stick shapes. His genius, capturing trader psychology without words. These simple candles became a powerful tool for anticipating market moves far beyond rice markets, and they're still the backbone of modern technical analysis. Think of candlesticks like mood rings for the market. The body size shows confidence or doubt, wicks hint at lingering questions, and color signals who's winning, a tug of war. A long green candle, bulls are in control, a doji, maybe indecision. This vibrant language translates raw price action into emotional snapshots you can spot in real time. The payoff comes when you spot a pattern signaling heads up, change ahead. A hammer or a shooting star candle might seem a small shape, but these can presage a reversal, a market about to pivot. Reading these tones early means you don't chase fads, you anticipate turns, jumping in before the crowd does and riding the wave for bigger gains. Indicators are formulas that turn confusing price chaos into clear signals. But which ones actually steer you right, and which are smoke and mirrors? Rockefeller highlights how moving averages became staples because they take the zigzag price action and smooth it into a clear trend line, much like a highway guide through bumpy traffic. In 200-day or 50-day moving averages, traders see whether to stay steady or prepare for a detour. When price crosses these lines, alarms ring for strategic buy or sell moves. RSI turns raw momentum into a dial between 0 and 100, telling you when an asset is overbought or oversold. Think of it as your market's exhaustion meter. Above 70, everyone's chasing the stock and it might be time to cash out. Below 30, sellers are overdone, maybe time to jump in on a bargain before others do. Volume is the often overlooked lifeblood that tells if a price move has real muscle or just whispers. A price jump on low volume, be skeptical. But volume spikes confirm strength. They're like the roar of a crowd backing your bet. The book reveals how savvy traders use volume to avoid traps and confirm signals. Numbers and charts give clues, but the real market moves come from human emotions and crowd behavior. Here's how behavioral economics sharpens your edge. Rockefeller applies Robert Shiller's and Daniel Kahneman's work to markets by showing how fear and greed aren't just metaphors, they're quantifiable forces driving price swings. For instance, the 2008 crash was fueled by panic selling as fear overwhelmed logic. Understanding these forces helps you avoid riding emotional roller coasters and stay rational. Market trends are less about fundamentals and more about crowd psychology, which can flip like a switch. The book explains how momentum traders love bandwagons until exhaustion, then the herd turns, sometimes overnight. This flip-flop creates rapid price reversals, like a stadium wave that's fun until it crashes entirely. By measuring investor sentiment through tools like the put-call ratio and sentiment surveys, you get a sneak peek at market mood extremes. Rockefeller teaches that entering positions when sentiment is overly bullish or bearish can place you advantageously, because the market often overreacts, giving you profit chances hidden in panic or euphoria. Remember that February 2020 moment on Wall Street? Those candlesticks, moving averages, and sentiment gauges were the language, and the secret world traders used to see the crash coming before headlines screamed it. Technical analysis is your toolkit to cut through noise and act on what's actually happening. Try this. Next time you watch a stock, spot one candlestick pattern and check its volume for confirmation. That's trading with eyes wide open. Subscribe for more book summaries like this one.